Well, a lot of the negatives that's already we feel has been priced into the marketplace because if you look at where the markets are trading at right now, in particular, when we look at the A share markets, A shares are trading roughly around 11 to 12 times forward earnings. If you look at MSCI China, they're trading roughly around 10 times forward earnings. So a lot of that negative has been priced in. You look at the fact that Chinese equity markets have underperformed, over the past 15, 16 months or so. And so a lot of the investor sentiment has been quite bearish for some time now with China. Now, obviously, with what's been happening in China over the past few weeks with the rising cases of COVID, that has created somewhat more of a negative sentiment, and overall economic activities is definitely slowing down. And some of the things that we're seeing right now is definitely somewhat unexpected because a lot of the economic figures that we're seeing and some of the stuff that we saw sort of over the long weekend just really painted a bit more of a weakening as people are locked into their homes.
There's very clearly some sectors that are struggling at the moment in China. We've talked ad nauseum about real estate. We've obviously talked a lot about technology and the government's legislative onslaught on the technology sector. We're also seeing obviously a lot of impact on primary manufacturing businesses from the Omicron story. How nuanced do you need to be with that investment strategy, and where then would you think it's worth investing at this stage, given the clear challenge we've seen in obvious sectors?
Yeah, at the moment, what we expect to see sort of more medium to longer term is that the PBOC should probably be on a trajectory where they're going to lower their policy rates a bit further. The prime rates should actually go down a bit further with the continual weakness of overall economic activities in China. When we look at what are opportunities, we're still seeing, particularly in China, especially within the domestic A shares, there's a lot of positive policy effects which will continue to really help stimulate some of the economies. And some of the sectors that we look at include electric vehicle related, solar power, renewables, specifically some of the consumer discretionary sectors, which are going to be more driven and led towards, sort of that push for consumption. And then also at the same time, we're manufacturing, and in particular, sort of technology-related manufacturing. These are all still going to be sectors that we have our eyes on, especially given sort of where the opportunity set are, and given the fact that we have seen quite a bit of pullback in some of these share prices over the past 6 to 9 months.